Hey, it's Jonathan with Live Mastering Champions, and today I want to talk to you about the stock market and investing in it. As 2025 continues, navigating the stock market can feel like traversing a maze. With ever-evolving economic landscapes and emerging trends, investors need innovative strategies to stay ahead of the curve and maximize their investment returns. In this video, I unveil the 7 stock market strategies that can empower you to capitalize on opportunities and mitigate risks in the coming year. Whether you're a seasoned investor or just dipping your toes into the stock market, these timeless tactics are designed to enhance your portfolio's performance and adapt to market fluctuations. From value investing to leveraging technology, my carefully curated list will guide you in making informed decisions that align with your financial goals. So, get ready to unlock your investment potential as we delve into the strategies that can elevate your stock market game in 2025. As we continue into 2025, understanding market trends is more crucial than ever for investors looking to maximize their returns. The stock market is influenced by an array of factors, including economic indicators, geopolitical events, and technological advancements. One of the most significant trends expected to shape the market this year is the continued integration of artificial intelligence, AI, and machine learning in various sectors. These technologies are not only transforming industries, but also providing new investment opportunities for those who can identify the company's best position to leverage them. Another critical trend to watch is the shift towards sustainable and socially responsible investing. As climate change and environmental issues dominate global discussions, companies with robust environmental, social, and governance (ESG) practices are likely to attract more investor attention. This focus on sustainability is driving innovations and creating new growth prospects, particularly in renewable energy, electric vehicles, and green technologies. Investors who understand and anticipate these trends can position themselves to benefit from the evolving market landscape. Additionally, the economic recovery post-COVID-19 continues to influence market dynamics. While some sectors are rebounding robustly, others are still grappling with the aftermath of the pandemic. Understanding which sectors are poised for growth and which might face headwinds is essential for making informed investment decisions. By staying abreast of these trends and analyzing their potential impact, investors can better navigate the complexities of the stock market in 2025. Now let's look at our first strategy, value investing. Value investing remains a cornerstone strategy for many successful investors. This approach involves identifying and investing in stocks that appear to be undervalued by the market. The idea is to purchase these stocks at a discount and hold them until their true value is recognized, leading to substantial gains. In 2025, the principles of value investing are as relevant as ever, particularly in a market that can sometimes be driven by speculation and hype. One of the key aspects of value investing is conducting thorough fundamental analysis. This involves examining a company's financial statements, including its income statement, balance sheet, and cash flow statement, to assess its financial health. Investors look for companies with strong fundamentals such as consistent earnings, low debt levels, and high return on equity. By focusing on these metrics, value investors can identify stocks that are undervalued relative to their intrinsic worth. Another important consideration for value investors is the competitive landscape in which a company operates. Companies with a sustainable competitive advantage, often referred to as an economic moat, are more likely to deliver long-term value. This could be due to factors like a strong brand, proprietary technology, or dominant market position. By identifying companies with durable competitive advantages that are trading below their intrinsic value, investors can position themselves for significant returns as the market eventually recognizes their true worth. Our second strategy is called growth investing. Growth investing is all about identifying companies with high potential for future expansion and capitalizing on their growth trajectory. This strategy focuses on companies expected to grow at an above average rate compared to other firms in the market. In 2025, growth investors will need to be particularly adept at spotting emerging trends in sectors poised for explosive growth, such as technology, healthcare, and renewable energy. One of the primary indicators of a high potential growth company is its revenue growth rate. Companies that consistently report strong top-line growth are often reinvesting their earnings to fuel further expansion. Growth investors typically look for firms with a track record of rapid revenue growth and a clear path to profitability. This involves analyzing a company's business model, market opportunity, and competitive position to assess its potential for sustained growth. Another critical factor for growth investors is innovation. Companies that are at the forefront of technological advancements or that introduce groundbreaking products and services can experience exponential growth. For instance, firms involved in AI, biotechnology, and clean energy are likely to see significant growth opportunities in the coming years. By investing in innovative companies with the potential to disrupt traditional industries, growth investors can achieve substantial returns. It's also essential for growth investors to consider the scalability of a company's operations. Companies that can easily scale their business models to accommodate increasing demand are better positioned for long-term growth. This might involve expanding into new markets, developing new product lines, or leveraging technology to improve efficiency. By focusing on companies with scalable business models and robust growth prospects, investors can maximize their returns in the dynamic market of 2025. Another strategy, and one of my favorites, is dividend investing. Dividend investing is a strategy that focuses on generating a steady stream of passive income through investments in dividend-paying stocks. This approach is particularly appealing for investors seeking stability and regular income, especially in uncertain market conditions. In 2025, dividend investing remains a viable strategy for those looking to balance their portfolios with income-generating assets while still participating in the potential for capital appreciation. One of the key benefits of dividend investing is the ability to receive regular payouts, which can provide a reliable source of income. Companies that pay dividends are often well established with stable cash flows, making them attractive options for conservative investors. By investing in these companies, investors can benefit from both the income generated through the dividends and the potential for stock price appreciation over time. Another advantage of dividend investing is the potential for dividend growth. Many companies with strong financial health and consistent earnings growth also have a history of increasing their dividend payouts. This can lead to a rising stream of income for investors, helping to keep pace with inflation and enhance overall returns. By identifying companies with a track record of dividend growth, investors can build a portfolio that provides both income and the potential for long-term capital gains. Moreover, dividend investing can offer a degree of downside protection in volatile markets. Dividend-paying stocks tend to be less volatile than non-dividend-paying stocks, as the regular income can cushion against price declines. This makes dividend investing an attractive option for those looking to reduce risk while still participating in the stock market. By focusing on high-quality, dividend-paying companies, investors can achieve a balance between income generation and capital preservation in 2025. If you're looking for more of a low-risk approach, then you will like the next strategy called index fund investing. Index fund investing is a low-risk strategy that involves investing in funds designed to replicate the performance of a specific market index, such as the S&P 500. This approach offers broad market exposure and diversification, making it an attractive option for investors seeking steady returns with minimal risk. Index fund investing continues to be a popular choice for those looking to build a solid foundation for their investment portfolios. One of the primary advantages of index fund investing is its simplicity and ease of management. Unlike actively managed funds, which require constant monitoring and adjustments, investors passively manage index funds by simply tracking the performance of a chosen index. This results in lower management fees and expenses, which can significantly enhance long-term returns. Investors can benefit from the overall growth of the market without the need for extensive research and analysis. Another key benefit of index fund investing is diversification. By investing in an index fund, investors gain exposure to a wide range of companies across various sectors, reducing the risk associated with individual stock investments. This diversification helps to spread risk and smooth out returns. making index funds a stable and reliable investment option. With market volatility and economic uncertainties still prevalent, the diversified nature of index funds can provide a level of stability for investors. Furthermore, index fund investing aligns with the principle of long-term investing. Since index funds are designed to mirror the performance of a market index, they inherently follow the market's upward trajectory over time. While short-term market fluctuations can impact returns, the long-term growth potential of index funds makes them an ideal choice for investors with a long-term investment horizon. By staying invested in index funds and benefiting from the compounding effect, investors can achieve significant wealth accumulation over the years. Another strategy is called technical analysis. Technical analysis is a strategy that involves analyzing historical price and volume data to forecast future price movements. This approach relies on charts and technical indicators to identify patterns and trends that can inform investment decisions. Technical analysis remains a valuable tool for investors looking to enhance their trading strategies and capitalize on short-term market opportunities. One of the key components of technical analysis is the use of price charts. These charts provide a visual representation of a stock's price movements over time, allowing investors to identify patterns such as head and shoulders, double tops, and flags. By recognizing these patterns, investors can anticipate potential price movements and make informed decisions about when to buy or sell the stock. Technical analysis has become more accessible to individual investors. Another important aspect of technical analysis is the use of technical indicators. These indicators, such as moving averages, relative strength index (RSI), and moving average convergence divergence (MACD), provide additional insights to a stock's price momentum and trend strength. By analyzing these indicators, investors can gain a better understanding of the stock's current state and potential future direction. Integrating technical indicators with price charts can provide a comprehensive view of market trends. Additionally, technical analysis can be used to identify support and resistance levels, which are key price points where a stock is likely to experience buying or selling pressure. Support levels indicate a price point where buying interest is strong enough to prevent further declines, while resistance levels indicate a price point where selling interest is strong enough to cap further gains. By identifying these levels, investors can set entry and exit points for their trades, manage risk, and optimize their returns. Understanding and applying technical analysis can give investors a competitive edge in the stock market. This next strategy is something that everyone should use, and that is called diversification. We've already talked a little bit about it. Diversification is a fundamental investment strategy that involves spreading investments across a variety of assets to reduce risk. By diversifying their portfolios, investors can mitigate the impact of poor performance in any single investment and achieve more stable returns. In 2025, diversification remains a key strategy for managing risk and enhancing investment performance in an ever-changing market environment. One of the primary benefits of diversification is the reduction of unsystematic risk, which is the risk associated with individual investments. By holding a diverse range of assets such as stocks, bonds, real estate, and commodities, investors can reduce the impact of any one asset's poor performance on their overall portfolio. This helps to smooth out returns and provides a level of protection against market volatility. With market uncertainties and geopolitical events influencing asset prices, diversification is more important than ever. Another advantage of diversification is the potential for enhanced returns through exposure of different asset classes. Different assets tend to perform well under different economic conditions. So by holding a mix of assets, investors can benefit from the varying performance cycles. For example, while stocks may perform well during periods of economic growth, bonds may provide stability during economic downturns. By diversifying across asset classes, investors can capture returns from multiple sources and achieve a more balanced portfolio. Moreover, diversification can also involve spreading investments across different geographic regions. Investing in international markets can provide exposure to growth opportunities outside of the domestic market and reduce the risk associated with regional economic fluctuations. In 2025, with globalization and interconnected economies, international diversification can enhance portfolio performance and provide additional risk management benefits. By diversifying across assets and regions, investors can build resilient portfolios that are better equipped to navigate the complexities of the global market. Our last strategy is very important, especially if you want to be successful. It's called risk management. Risk management is a critical aspect of successful investing, involving strategies to protect investments from potential losses. Effective risk management helps investors preserve capital, minimize losses, and achieve more consistent returns. In 2025, with market volatility and economic uncertainties still prevalent, implementing robust risk management practices is essential for safeguarding investment portfolios. One of the key elements of risk management is setting clear investment goals and risk tolerance levels. Investors should define their financial objectives, such as retirement savings or wealth accumulation, and assess their ability to withstand potential losses. This involves evaluating factors such as time horizon, liquidity needs, and personal risk preferences. By understanding their risk tolerance, investors can make informed decisions about asset allocation and investment strategies that align with their financial goals. Another important risk management strategy is the use of stop-loss orders. Stop-loss orders is an instruction to sell a security when its price reaches a certain level, thereby limiting potential losses. By setting stop-loss orders, investors can protect their investments from significant declines and avoid emotional decision-making during market downturns. In 2025, with advanced trading platforms and tools, setting and managing stop-loss orders has become more accessible and effective for individual investors. Additionally, diversification, as discussed earlier, is a fundamental risk management strategy. By spreading investments across different assets and sectors, investors can reduce the impact of poor performance in any single investment. This helps to mitigate unsystematic risk and achieve more stable returns. In 2025, with the dynamic and interconnected nature of global markets, diversification remains a key strategy for managing investment risk. By implementing a combination of these risk management practices, investors can protect their portfolios and navigate the complexities of the stock market with greater confidence. As we navigate through 2025, the stock market presents both opportunities and challenges for investors. By understanding and implementing the top 7 stock market strategies outlined in this video, you can enhance your investment returns and mitigate risks in the ever-evolving market landscape. Whether you prefer value investing, growth investing, dividend investing, or index fund investing, each strategy offers unique benefits that can help you achieve your financial goals. Staying informed about market trends such as the integration of AI, the shift towards sustainable investing, and the post-pandemic economic recovery is essential for making informed investment decisions. By leveraging technical analysis, diversifying your portfolio, and implementing robust risk management practices, you can navigate market fluctuations with confidence and optimize your returns. Ultimately, crafting a successful investment strategy for 2025 requires a combination of knowledge, discipline, and adaptability. By staying committed to your financial goals, continuously educating yourself, and adjusting your strategies as needed, you can unlock your investment potential and achieve long-term success in the stock market. Embrace the opportunities that 2025 has to offer and take proactive steps to maximize your investment returns in the year ahead. Thanks for watching. I hope you enjoyed this video. Don't forget to share, like, and subscribe for more content. Stay focused, stay determined, become a champion. See you in the next video. Carpe diem.